What's going on, guys? My name is Richard Muglin and welcome to another video. So today what I'm going to be doing is going through my focus list of stocks that I'm going to be looking to take up positions in if we have that fall through day next week. So overall we have 17 stocks on this list and kind of a further 20 or so stocks on my kind of universe list that I'll also be watching. So the full list will be in the description below, and if you have any questions or stocks you think I should add to this list, make sure to leave them down below in the comment section. But for this video, we're going to be going through the technicals in TC2000, talking about buy points, potential setups using my green dots, blue dots, and also taking a look at potential areas of resistance. And then we'll head over to Marketsmith and talk about each of these stocks' fundamentals. And before we get started, this is a sponsored video as I am a part of the IBD Influencer Program. Marketsmith to me is the best source for these key fundamentals, that earnings growth, their proprietary ratings. I think they do a fantastic job. And if you do want to try a trial, I think you can do 3 weeks for $20, and a link to that trial will be in the description below. So starting with the technicals and looking at AMD, you can see that it's running into a bunch of potential areas of resistance. You've got the 30-day moving average right here, the 50-day moving average, the most recent green line, which was set all the way back in 2000 almost. And you've also got a more recent area of resistance right here when it had an attempted rally back in early March. So it could kind of bounce off at this point, and it would be constructive actually if it didn't make a new low, but if it backed off a bit before setting up once again. So that's kind of what I'm looking for in AMD. And then at that point, I would look for all the moving averages to move up, the 30-day moving average, the 50, and also that 10-day moving average. And I would look to use either an entry setup with a Bollinger Band bounce or a green dot. So next up, we have CHWY, and you can see that recently it's been doing very well. That RS line is really peaking, but it's still not above that previous all-time high, which is what this green line signifies. So for me, if we have that fall through day, I would wait for a pullback to a key moving average, then potentially a green or blue dot entry, or a bounce off that 50-day moving average if it pulls all the way back to that. But overall, potential areas of resistance, you've got it right against kind of this prior area of resistance here at 35.48. And it is a little bit vulnerable right now, and there's actually kind of the one breakout working right now, so it could be telling how this stock acts from now on. So next up, we've got COE, or China Online Education Group, and you can see that it's been doing very well since the start of this year and has been really outperforming the market during that time. And it's been very constructive that it's pulled back to this 50-day moving average and found support there instead of falling through that to this purple line here, which signifies the 200-day moving average, which a lot of stocks fell to that and found support. But this one was strong enough to stay above that 50-day moving average. So for entry points, I would look for a Bollinger Band bounce, a green dot. If it pulls back to the 50-day, a bounce off the 50-day moving average, that's a potential setup. In terms of potential areas of resistance, you can see I've mapped out this 37.1 level, which if it makes it that far could offer a significant area of resistance. But if it managed to break through that, I will definitely take up a position because that shows that it has considerable momentum behind this move. So next up, we've got DOCU, or DOCU. And once again, it's been strong enough to stay above or at least near the 30 and 50-day moving averages, and was able to bounce off that 200-day moving average. So for entry points, once again, I look for a green dot or blue dot entry, which signifies basically a reversal in momentum. And potential areas of resistance, I mapped out these two levels here, which are kind of prior levels that it wasn't able to break. But once again, I think there's a strong stock, good fundamentals behind it, as we'll explore in Marketsmith in just a second. And overall, this is one of the key ones that I'm focused on. Next up, we've got DXCM, and it's rallied above that 30 and 50-day moving average after bouncing off that 200-day moving average. And as for setups, I'll look for a green dot or blue dot entry, or potentially a bounce off of the 50-day moving average or 10-week moving average on a weekly chart. And in terms of resistance, you've got 292 and 307. It wasn't able to break those previously, but if it manages to do that, it'll be right at all-time highs, which is my ideal setup. So next up, we've got eHealth Inc. or EHTH. Once again, it's right near all-time highs, which is my favorite thing to see. And it's kind of been basing since late January. And you can see it rallied from its 200-day, as a lot of good growth stocks did. And it's currently above that 30 and 50-day moving averages, which is a plus. And just a second, I've actually made a column kind of showing this. So you can see that a lot of the stocks I'm looking at are above both that 30 and 50-day moving average. So there we go. And you can see the area of resistance, the big one that it failed to meet right here and right here is that 148 level, or probably that 150 level. So if it breaks through that with any conviction in terms of volume, I'll definitely take up a position in this stock. So next up, we've got FIVN, which is kind of a slow grower on this list, but you can see that really it's been a fantastic stock since 2016. And you can see that this stock on the daily bounced off the 200-day moving average well, and is now back above that 50 and 30-day moving average. So I'll be looking for a breakthrough the 78 level, or a green dot, blue dot, bounce off the 10-week, my kind of favorite setups. And probably in the future, I'll be making a video with the 5 key setups that I use. And if you would find that interesting, go ahead and leave a comment down below telling me that, because I think that could definitely be helpful for a lot of people. So next up, we've got GSX, which is probably one of the top stocks on my list. You can see from its chart, well, actually you can't see from its chart, that we're actually in a correction at this time. It had a huge run up in 2019 and is now forming a nice long-term base, and seems ready to break through this 46.48 level. So it bounced off the 50-day moving average right here and had a couple green dots, but since we're in a correction, I didn't feel comfortable taking up a position at that time. But if it does so again and we get that fall through day signal, I will take up a position in GSX. It's actually number 1 on my fundamental list right here. And if you want to copy to this list, make sure you leave a like on this video, and there'll be a link in the description below. But getting back to GSX, as I said, there's a potential area of resistance, and I want to see a good breakout above average volume, supporting that move. And you can see it's just been really outperforming the market for a long time now. So next up, we've got NET, or Cloudflare Inc., which is a recent IPO, which I love to see, and it's consolidating right at its kind of previous IPO high. And it's currently above that 50 and 30-day moving average, but there's a lot of potential areas of resistance here. As you can see, it wasn't able to break through that barrier on March 5th. So this is one to watch, and you can see you had some potential entries here with some green and blue dots here. And if we get that fall through day, this will be one of the top IPOs on my list. Next up, like AMD, we've got NVIDIA. Really good growth numbers the past few quarters, and a good solid bounce off that 200-day moving average, and a rally right to those 30 and 50-day moving averages. So these have been key for a lot of stocks, and for me, they could be a lot of areas of resistance for some stocks, but if a stock is able to rally above them, that's a positive right now. So if you're looking for a good scan, just stocks over the 30 and 50-day moving averages, and of course the 200-day moving average, those are pretty good scans. But overall, you've got some more resistance levels at 286, where it wasn't able to break through previously, and finally the all-time high at 315.93. And in terms of entry points and stuff like that, a breakthrough these prior resistance levels on above average volume, that would be a good entry, or of course a blue dot, green dot, or a bounce off the 50-day or 10-week moving average. So next up, we've got PLMR, And just as I was saying with NVIDIA, it would be a positive if it was actually above those 30 and 50 day. You can see that PLMR managed to do that. And once again, this is a recent IPO, which I love to see. And you can see that this correction was kind of perfectly timed because it kind of needed a break from this huge run up in 2019. And this correction offered that chance. And it bounced nicely off the 200-day moving average and is consolidating right at this previous area of resistance at 56.62. So for entry points, a break through this or into all-time highs, obviously, or as I said, one of my dot indicators, that would be another great entry. So next up, we've got Ring Central or RNG, and it rallied very nicely on Friday, showing really good relative strength because the overall market finished so badly. And you can see it's right up against all-time highs. This has been very strong the past few days. And it bounced nicely off the 200-day moving average. It's above that 30 and 50-day moving averages. And you can see it's poised to really break out. And like CHWY, we can see, we can tell a lot about this market if we watch kind of the leaders that are potentially breaking out. If those work, that means maybe this market is ready to turn around. But once again, this 252 level, that's a key area of resistance. And if it breaks through that on above average volume and we get that fall through day, this will be top on my list to take up a small position and scale back in to this market. So next up, we've got Safe Hold or SAFE, which was one of the few safe holds back in February and March, but then it fell with the rest of the market in early March. And it bounced nicely off this 43 level right here, which was a previous area of resistance. And right now it's rallying nicely above its 30-day and 50-day moving averages. And the 66.74 level, that's a key area of resistance for me. So a buy point, a break through that, or one of my other entry setups. Next, we've got TAL or TAL Education Group, and it's been basing nicely since mid-January. Didn't fall to its 200-day moving average, which is a positive, and it's right at that key, those key 30 and 50-day moving averages. So a break above those would be nice to see, and hopefully back into all-time highs above this 59 level. So next we've got TDOC, which has been probably one of the best stocks out there, and it's right at all-time highs. A potential area of resistance is this 177 level, which it wasn't able to break. But for me, I probably wouldn't invest in this stock until it consolidates a little bit, at least in the short term, and then has another green or blue dot entry signal. But very strong stock. You can see all the moving averages moving upward, the 10 over the 30, over the 50, over the 200. That's kind of the ideal trend that I like to focus on. So next up, we've got Zoom, which I was stopped out of on this day. My stop was 15% below the closing price, but still I was just stopped out. But even when you're stopped out, it's a good idea to keep an eye on those stocks, especially if they're one of the strongest out there in this market. And Zoom definitely has been. You can see it's rallying a little bit, and it could break through this 164 level. And if it does, and we get that fall through day on above average volume, I'll take up a position in this stock. But overall, strong stock. As I said, all the moving averages are moving upwards, and I would look for one of my entry points, either with my dots or a bounce off a key moving average. So lastly, we've got Team, and you can see that it's almost been basing since almost July of 2019 after a big run up. It was one of the best performing stocks after the December 2018 low, but it was time for it to kind of take a break, and it had a constructive kind of base here and then a very deep correction, but it's back over that 200-day moving average as well as the 30 and 50-day moving averages. So for entries, I like to see it move through this 155 level into all-time highs on above average volume, or meet one of my other entry setups like the dot indicators or a bounce off this 50-week moving average. So that's pretty much it for the technicals. Now let's go ahead and take a look at the fundamentals of all these stocks. So first, taking a look at AMD, you can see that this has been a very good growth stock. The last earnings report was fantastic, earnings up 300%, sales up 50%, and after-tax margins up 18% as well. And the annual estimates are very good. For 2020, they're up 75%, and 2021 up 39%. And overall, it's got that nice group RS rating as I was talking about, and a decent accumulation distribution rating as well. So next we've got EHTH. You can see also a very good recent earnings report with earnings up 140%, sales up 124%, and after-tax margins up 34% as well. The annual estimates, you can see that they're actually down for 2020, but back up there in 2021. Taking a look at SAFE, you can see that the earnings have been very good the past 3 quarters, but you do kind of have a slowdown in terms of earnings, but that sales is still up 100%, which is fantastic. That's exactly what you look for. And that after-tax margin is really, really good at plus 37.6%. So a very incredible stock right here. The estimates for 2020 up 60%, for 2021 up 25%, and pretty good ratings from IBD, except for that EPS rating, but that SMR rating is fantastic, and that accumulation distribution rating is pretty good given the circumstances. So next up, we've got CHWY, which if you don't know, provides pet products through the online store, and we actually use it, which is very convenient just because you don't have to go to the store all the time and buy 80 pounds of dog food. So it definitely saves us a lot of time. But overall, it doesn't report earnings, but those sales are increasing steadily, which is good to see. And sales are almost more important in terms of new IPO, because even if it isn't profitable, if institutions see that sales growth, they'll take up a position in the stock. And you can see the annual earnings aren't really there. They're still negative. And it's got okay ratings from IBD. You can see that EPS rating is pretty bad, but that group RS is an A+, which is great to see. So next up, we've got China Online. And you can see that, as the name suggests, it provides online English education to Chinese students via its website. And you can see the earnings last quarter were fantastic, up 103%. Sales were up 32%. And the after-tax margins just went positive. And for earnings, the 2020 estimates are still negative, but for 2021, it's supposed to make a big jump to 0.62, which is good to see. So a strong stock and a really good most recent earnings report. And with the switch to online, you can only think that this company will be will benefit from that. So next up, we've got DOCU, which is another stock that will benefit from social distancing and kind of the after effects of the current situation. It provides e-signature solutions for businesses, and you can see that the earnings the past 2 quarters have been fantastic, up 100% most recently, and sales up 38% as well. And the estimates for 2021 up 65%, and for 2022 up 63%. So really a fantastic company. And moving on, we've got DXCM, which you can see is has had really good earnings growth the past 3 quarters. Most recently up 105% in terms of earnings and up 37% in terms of sales, and the after-tax margins are very good as well. You can see for 2020, the estimates are up 20%, and for 2021, up 40%. So another very good company, and what they do is they develop continuous kind of monitoring systems for patients. So a very good company. I respect every biomedical company. I think they do great work. A lot of innovation going on right now, which is why that industry group is so strong. So moving on, we've got FIVN, and you can see that they develop cloud-based consumer contact software to help for sales and marketing. And taking a look at their earnings, they are kind of slowing down, but they're still pretty consistent. Sales was up 28% last quarter, and those margins were up as well. For 2020, the estimates are up 2%, which isn't that much, but for 2021, they're up a further 18%. Next up, we have GSX, which also provides online education in China like COE, but their earnings and sales growth is even better than COE's. You've got earnings up 450% last quarter, sales up 406%, and those margins increasing as well. The estimates for 2020 and 2021 are just off the charts. So this is definitely one that I'm looking to take up a position in just because it's producing some fantastic numbers. So next up, we've got NET, or Cloudflare, one of the recent IPOs. And as I said, I look for sales growth in these IPOs, and NET definitely fulfills that requirement with sales up 51% last quarter. The earnings aren't there yet, but as I said, the sales growth is what's important. And overall, good group RS and pretty good accumulation distribution. So next, taking a look at NVIDIA, and I covered this in kind of my long-term leaders video, but most recently the earnings report has been fantastic, up 136% in terms of earnings, sales up 41%, and those margins are just consistently very, very good. And the estimates for 2021 are up 32%, and for 2022 up 21%. So really fantastic company, great stock. Next, looking at PLMR, you've got really good earnings growth the past 4 quarters. Earnings up 140% last quarter, sales up 121%, and margins up 33% as well. The estimates for 2020 are up 29%, and for 2021 up 23%, and it's got very good IBD ratings with a 99 composite rating and a 99 EPS rating, which is kind of rare to see these days. So next up, we've got RNG, which provides software for firms to communicate with staff, which you can see would benefit from a situation like this. So a lot of these stocks are kind of software side of things, which is normal to see in this type of environment, as those companies won't be affected as much by this pandemic. But overall, very solid stock. You've got not the best earnings growth, but those sales is growing consistently, and those margins were up 8% last quarter. For 2020, the estimates were up 12%, and for 2021, up 30%. So overall, pretty good stock. Next up, we've got TAL, which provides K through 12 after-school tutoring via learning centers. And you can see the earnings growth isn't there, but that sales growth is doing very, very well, and has actually been accelerating the past 3 quarters, which is always good to see. And you've got increasing after-tax margins as well. So for 2020, the estimates are down 85%, but for 2021, they're back up there, up 609% to 0.78. So kind of interesting there, but overall, strong stock, good IBD ratings except for that EPS, but overall, it's got a composite rating of 97. So getting down to it, we've got TDOC, and overall, no earnings to speak of, but that sales growth is there. And looking at the estimates, you can see it's still negative, but increasing, which is good to see. But as I said, price action is king, and this has been the best performing stock recently. And looking at the chart, you can't even tell that we're in a huge correction right now. Next up, we've got Zoom, which, like Teladoc, has been a fantastic performer recently, but it actually has fundamentals backing up the move. And you can see great earnings growth the past 4 quarters. The estimates for 2021 are up, and they're up 29%. And the 2022 numbers are up as well, 31%. So very good numbers. And as I said, this is a very strong stock that's only benefiting from the situation. And I'll be trying to take up a position at the next low risk entry. So moving on, we've got our last stock, Team, which has been performing very well, very solid numbers. Most recently, earnings are up 48%, sales up 37%, and margins are up as well. And for 2020, the estimates are up 27%, and for 2021, the estimates are up a further 26%, and it's got very good ratings from Investors Business Daily. So those are my picks once we have that fall through day. I hope this video helps you out, and if you stayed this far, thank you so much. Please remember to leave a like down below if you haven't already. It really helps me out and the channel. But other than that, thanks so much for watching, and I'll see you guys in future videos.